Hi, Jasmine here from Redwood Financial, and this week's frequently asked question is, what is inheritance tax planning? Well, it's a great question, and I absolutely love inheritance tax planning because most clients don't realise that inheritance tax is a completely voluntary tax that we choose to pay on our estates simply because we've not taken any action and forward planning. Now, at Redwood, we absolutely detest and we never recommend using things like tax avoidance schemes or tax evasion schemes. Everything we do at Redwood falls under the remit of tax mitigation. Tax mitigation is about legally using the framework in the law and as accepted by HMRC to legitimately reduce someone's tax liability. Now, sometimes that could be in the form of income tax, whether that's making a contribution into an ISA or a pension, for example. And inheritance tax is no different. There are reliefs, allowances, there are strategies that we can do which are legitimately accepted by HMRC to mitigate and reduce your inheritance tax liability. It really just comes down to making sure we have a clear plan in place and that we've enacted that plan before obviously death occurs. And that's where most people go wrong. We put things off, we mean to get around to dealing with our inheritance tax problem, and then we leave it until it's too late. And that's when the tax ends up being triggered. But actually, it's not necessary. And with the right planning in place, we can go through all of the options and assess them with you, and then implement the right type of inheritance tax planning for you. There are loads of options out there that you can consider, and it's not one size fits all. For some people, it might be about gifting or spending more money. Others might use trusts or investment strategies, or even consider something like life insurance. So it's really important that you take specialist advice on this area before you implement any inheritance tax planning strategies. And as I've already said, please just make sure that what you do with regards to inheritance tax planning definitely falls under tax mitigation, legally using the framework within the law as accepted by HMRC. For those people that do legitimately and proactively plan to reduce their inheritance tax liability, it's going to save them 40% on death instead of paying inheritance tax, which, as I say, is completely unnecessary with the right planning in place. So if you want more information on this, where can you find more information? Well, we've got lots of blog articles and information and resources on our website. We've also got a health check with regards to your estate planning and your inheritance tax position that you can complete the quiz and get a bit of a health check from our Willing Wisdom Index. And also we've got our free wills, trust and estate planning webinar, which also dives down into inheritance tax planning in a lot more detail as well. And that's free to watch and register to watch that at any time. So check out the website for more information and look at all of those resources, or just simply contact us at Redwood for more information. Hopefully that answers this week's frequently asked question, and I look forward to answering more of your questions next week.